UBS has just crowned Toronto as the largest housing bubble in the world. Welcome back to the channel. My name is Adam Nadler. I'm the owner of Vision Real Estate. If you enjoy this content, please feel free to hit that like button. That's going to help the algorithm to push this content out to more viewers like yourself. And if you like the cut of my jib and you think to yourself, hey, I'd like to talk to that guy about real estate, feel free to click on the link in the description below. That'll connect you to a calendar where you can book a quick 15-minute chat at a time that is most convenient for you. Or you can also just email me directly any question you have to adam@visionrealestate.ca, and I will get you a custom personal video response within 24 hours. As I'm shooting this, it is Thursday, October 13th. If you type real estate news into Google right now, you're going to see a ton of headlines about UBS rating us on their index as the biggest bubble for real estate in the world. For those of you who are not familiar with it, UBS is an investment bank based out of Switzerland, and they do some pretty good research. I wanted to go over that in this video right now because Toronto has come out on top as their number one ranked biggest housing bubble. All right, so let's jump in. Toronto is the number one spot with a 2.24 ranking on the index, right in front of Frankfurt, who's right behind us at 2.21, then Zurich, Munich, Hong Kong, and then Vancouver in sixth place. So we've got two major cities in Canada in the top six. So let's talk about UBS's index score. The index score is a weighted average of the following 5 standardized sub-indices: price to income, price to rent, change in mortgage to GDP ratio, and change in construction to GDP ratio, and relative price city to country indicator. So what this index is really talking about is affordability. Pricing has gone through the roof during the COVID pandemic as the money printers got turned on and went a little nuts. We also have mortgage rates increasing now with a highly leveraged economy, which is creating a big problem as people's incomes have not increased anywhere near the amount that all of the cost of borrowing and costs of goods and housing has increased by. Now, the word bubble can definitely be a bit of a buzzword, so let's go into how they actually define a bubble. The term bubble refers to a substantial and sustained mispricing of an asset, the existence of which cannot be proved unless it bursts. Typical signs include a decoupling of prices from local incomes and rents and imbalances in the real economy, such as excessive lending and construction activity. Now, this report is pretty broad in its averages when looking at housing markets because it's comparing it at a global scale. I don't mean to say that to minimize what they're saying. I do believe that Toronto on a global scale is still really high up there in rankings for price growth over a very short period of time. But again, I'm just a big nerd and like to focus on specific asset classes because most of my audience that are watching right now are either in Toronto or thinking of moving to Toronto. If you bought a detached home in the Greater Toronto area at the height of the market in, let's say, February, basically about 20 to 25% of the equity in those homes was wiped out between February and now. And now we know that price growth or price decline is directly correlated with sales volume. However, when we look at the condo market in particular, we've seen a steep decline in sales volume, but their pricing for condos has remained relatively flat between the beginning of the year and now. So is this report telling us something that we don't know, or is this just summing up something that we already are very well aware of? Let me know what you think in the comments below. Do you think that we have seen all of the price dropping that we are going to see for this calendar year, or do you think that we are going to see another 20 to 25% drop in average price that we've already seen this year. Moving on, they had a very interesting section of this report just titled Game Over. A lot of what this paragraph says actually mirrors a lot of what Tiff McClem has been saying recently as he keeps jacking interest rates up. The robust labor market therefore remains the last pillar of support for the owner-occupied housing market in most cities. With a deterioration of economic conditions, this too is at risk of faltering. Indeed, we are witnessing the global owner-occupied housing boom finally under pressure, and in a majority of the highly valued cities, significant price corrections are to be expected in the coming quarters. Basically, what this report is saying is that we are relying solely on unemployment being low right now, but unemployment is starting to slowly creep up as interest rates continue to climb. Businesses are unable to sell as much product and services that they once were, and therefore cannot sustain higher levels of payroll that they had at the beginning of this year. So to sum this up, I think that this report definitely paints a good picture of the overall macroeconomic situation, but I do believe that the core of the city, in particular the condo market in the city, is doing quite well considering our economic situation and is rather insulated compared to detached homes in the GTA. I really hope that you found this content valuable and that it helped to kind of clear up the messaging that we're seeing in headlines about UBS's index report. If you enjoyed this content, please feel free to join our community and subscribe to the channel, and I will see you next time. If you like that video, click the subscribe button on the right, or feel free to enjoy another video here on the left.